dude. Okay. Good morning, you guys. Another wonderful day. It's Monday. Um, as you guys know, last night we looked over. Well, before I start on, hold on. This is for training purposes. This is not financial advice. Y'all have any? If y'all need financial advice, see a financial planner. Okay, so right now we're looking at gold. We went over the trades last night, and we looked at the market, and we figured out that if we were wanting to take gold, let's come out to a little bit higher time frame. We want it to break this high as liquidity, and you also have this these buy candles sitting here. So we would feel more comfortable if this broke, came up into our selling Fibonacci. We drew a fib from the high to the low. That's a 88.6. Gold loves the 78.6, right? We also see that 2050 is a quarter point, so that's also in our zone. We drew a fib from the second leg, or just from this leg, from where the bottom here, and then it broke out. Like that's a pretty good break from there to there. So we drew a buy fib, and we see that the take profit is right in our sell zone. So in my opinion, this needs to hit. And if you want to, you can technically draw from here to here too, right? But it's still look, the take profit on the buy side is right in our sell side. So we have a sell fib as one confirmation. We have the take profit on a buy fib as a second confirmation. We've already had it oversold here, right? And it's getting lower, even though the price, so it's not divergent. It's going the same direction. So it's not really yet a one of our signals. Okay, but we do have. It's not a perfect double top, but we do have these wicks sitting at top as liquidity. We have the quarter point, like I said before. So I would feel more comfortable in entering a trade up here. So if you are a scalper, there is an entry, or was an entry a few minutes ago. Um, you often hear me talk about Elliott waves and how the market likes to move in three pushes: one push, two push, three push. Okay, so there could be an opportunity to enter a trade off of this last order block kind of an area. So there would be a long opportunity there if this Fibonacci here lines up. Okay. And as you can see, the take profit on that second leg, which is my favorite leg, uh, almost hits perfectly with this last sell candle, which is this order block before it pushed off, right? So if you're a scalpy kind of a person, you could take a long here and try to hold it up here to this 2050. I'm not necessarily going to get into that trade because I'm going to come out to a little bit higher of a time frame and just get like a better view. Like as traders, we don't need to be in all the trades. We need to be in the best trades. So for me, if this breaks, it comes up here, I feel better about getting into a trade here, selling off than I would trying to play around in the middle of this area, right? And the same thing on the buy side. I would like to see this break this as liquidity, give us a full retracement down to this buy zone, which would be this order block and where this candle popped off. I would love for it to get down to here before I start looking for buys. It's just safer. So for me, right now, at least, this is going to be my no trade, you know, my no trade zone. I'm just going to let it do what it's got to do. There's trades to be had. Like I just said, there was a sell a few minutes ago, right? High, low, lower high, lower low, and there it is. And if you are a scalper, you could have very easily drawn your fib from here to here and said, okay, yeah, I'm willing to take a 78.6 with a TP there. So your entry would have been 29, and your stop loss would have been 33, so that's 40 pips, right? And your TP would have been down here. So 40 pips, and you would have had a TP of, let's say, what do we say it was? 29 and 15. So that's 10. It would be 19 and plus another four. So what did I say? 20. Sorry, I'm being fucking dyslexic right now. 14, 140 pip. So there was a trade there. But again, you know, Maybe maybe if I wasn't setting up my computer and looking trying to get all this stuff going, I probably would have taken that trade actually. But there it goes. But what's more important is that you see why why that would have been a good trade. That was actually a good trade. I missed that one. We had a break of structure on the trend line going up. Okay. I wasn't 100% confident on it at the time last night because this low hadn't broke that low. It did now. Now it's broken. Okay. See if I can move this over. Here we go. So that low now broke that low. So now it's like a little more of confirmation. That's a true break of structure. So high, low, lower high, lower low. We have a true break of structure. Um, so yeah, that'd have been a hell of a sell right there. And again, you could probably take some of your TP here at like 50 pips, like a little bit and protected because that's liquidity. That's a double bottom. So I want you guys to get used to seeing double bottoms and double tops so you know where liquidity sits. There was a large amount of orders that got put in the market here to push it up. And likewise, that came back down and push it up. So there's orders here that need to get hit stop loss. And so if we come out just a little bit, the same deal. You've got a large orders here and a lot of orders here that I'd like to see get hit. So we'll see what the market brings for us. This is 7:30. So if there was news, I don't think there was, it would have came out. And so we're going to play the extremes. We like to play on the fringes, you know. Let's see what the market does. So that's Goldie. Last night we did take a GJ trade live. Let's check on it. And I want to go over why we took the GJ trade. This is a very scalpy, small type trade, nothing major, and we only took a half position. We didn't take a full position because we wanted to get rid of the FOMO. And you're taking a trade on a Sunday in the agent session. It's not the best time to trade. Millions of reasons why we didn't take a full trade. So we just took a little, a little trade, see if we can catch a few pips. Good stuff. Got to run. Discord for YouTube link. You're going to be interested in following you. Yeah, thanks you very much, Jason. Have a good day, brother. Okay, so let's set this. So GJ on a higher time frame is setting a double top. Let me just hide all this stuff. Okay. On a much higher time frame, let's just go to the daily. Okay, let's zoom in here. This is pretty much a double top, but this is a new higher high. And if you draw a line from there to there, it double topped, but then it closed. The daily gave us a doji and closed below. So that's kind of like a lot of people will consider that just a wick to get whatever kind of liquidity that was here for people on break-even trades. So if we come down to the 4-hour, right, you see the push up and then a strong sell-off candle because it hit whatever stop losses and break-evens were there. So if you were selling and you had it at break-even, you just got taken out of your trades. All right. So that's it. Come down to a little bit smaller time frame. We see that it hasn't really broke structure. I'm going to put the drawings back on here. It hasn't broke structure and it hasn't broke the trend line on the 4-hour. And if it didn't break it on the 4-hour, it's not going to break it on the 1-hour or whatever. You could draw probably a smaller trend line, but there it is. So what we're thinking is, okay, look, it double topped. It had a doji candle. It closed below. Let's see if we can't come down to a smaller time frame and figure out how we could get into like a smaller trade. It's super risky because the momentum's going, buying up, but this is what we found out. So from the bottom of this last push, okay, the push started here, and then we had this gigantic bull candle, a little bit of retracements, and then more. This is one big push, okay? And then as you can see, it consolidated, it gave us like a flag, and then it pushed again. So for this push, we marked out the TP at 27 extension, okay, which is almost perfect where it hit. So this is like one confirmation. Okay, look, that first push hit TP. So let's just delete that little arrow. Okay, so I'm going to delete that fib now so you can we see it. It's there. Let's zoom in here. The second push came up and formed almost a double bottom. I would have liked for that to have broke. If this would have broke this bottom here, this trade would be, I would feel better about it. Okay. We did get a strong bear sell-off. Then we have a look at the internal Elliott waves. One push up, two push up. The third push gave us a double top, and then it started to sell off. So then this double top is now liquidity. I think this is going to get taken out. I'm pretty sure of it. This is not a double bottom per se, but it is wicks to the downside. So anytime you see something like this, that is going to get taken out. So in my brain, the best opportunity is for the market to push up, take out these double tops, get us into our sell zone, which is 78, 88.6 of that huge sell off. So get us into this zone and then tank. Okay, that's plan A. So what we did last night is we took a sell, and I'm not sure exactly where it was at, but it was around this position here. Okay, it's in this 61.8 zone. And if you look too, like that's the magic fib number 61.8. It's not the one that I trade off of because I like a deeper retracement, which give us a better oversold situation in our RSI. But it did wicket close below, and it did retest that area. So we're like, oh, I mean, it's worth it's worth a half a percentage. It's worth a half entry. So we took that trade from there. Our stop loss is unfortunately way up here. But if we look, we do have an immediate target right there that we can at least protect on and take maybe some partials. And if again we come back out to the 4-hour, where's our targets? We have a consolidation here that has a lot of sell candles that needs to get taken out. You have another one here, and your real one is way down here. So we could take a small entry now with hopes that we're looking at one of these trades. I mean, that's a 10, 11 to 1 trade. We're going to protect when we get any sort of push, and then we could fire off our second bullet, our rear entry, our real entry when we're more confirmed. And look, and the price is coming down to this trend line. If it breaks this trend line, that's the 4-hour trend line. I know a lot of guys we trade with are trend line break guys. So you could take your entry here on trend line break on 1 hour, or you could be like us and take it way up here. So, so that's the reason why we got into that. We saw the bear, we measured the fib, we saw the 61.8, we saw it get double tapped. That's a 3-leg push. The break of structure 1, 2, the third leg just double topped. Unfortunately, it didn't go all the way up. I think it still will though. I think we're going to go into some drawdown on this trade, which is cool with me because I'll fire a second bullet up here. And if we do fire a second bullet up there, our stop loss is even smaller. No big deal. Don't over leverage on the first trade, on the first entry. If you take something around here, or if you do trend line break, I would feel more confident with this first entry if these lows break, because then we'll have a true break of structure if that breaks. So half position, get rid of FOMO. That's like, I think that's the best way to go about it. So there's the reason why we took a GJ trade. We have a double top on a high time frame, double topped and closed below. We had a huge sell off. We measured the fib. We're having rejections at 61.8. On this big fib, we also confirmed that this is the TP area for those buys, and the market should turn around. And currently we're in profit because we took a trade at the double profit, so at the double top. So we're not in a lot of profit, but we are in profit, and it's just getting better. I'm not concerned if we go in a drawdown, and I'll be happy if this damn thing tanks, right? So we're good either way. We did not over leverage. That's the best part. We didn't over leverage. Took a half position. We're ready. It does what it does. I didn't have any other request for any other pairs. If you guys have requests, please put it in the chat and we can look at those. But for now, the only thing I see, I'll take this back. Let me go look at Dirty 30 real quick. I did take a trade on Dirty 30 a few minutes ago. And this is just pure gambling and speculation on my part, to be honest with you. Very small stop loss, risk like $7, something super small. I just see the double top. So I was like, you know what? I'm willing to risk however many pips this is. What is that, like 9 pips? Yeah, I'll risk 9 pips. And what's the target? I mean, if we're going to throw a Hail Mary, screw it, right? Let's just set the top take profit way down here. You never know. It broke all-time highs. That could be like, so if you look at, since I'm sharing my screen, actually, let me minimize all this stuff. If you look at the Wyckoff, before you have a reversal, it'd be this way. You have a spring that takes that all stops. See that wick down? Okay. This is my background on my computer. You have that wick down and then it pops. So for me, if you look at this on the higher time frame, we'll just hide all these drawings. That's the top. We're losing momentum, right? Maybe that's the spring, the wick that takes out anybody else before this thing tanks. And so I'm willing to risk 9 pips on the chance that this is the high that leads to a massive sell-off. This is the daily, all the way down to here. Yeah, I'll risk 9 pips on that, right? I don't have much faith that it'll hold, but again, sometimes you got to throw Hail Marys and definitely not over leverage in that situation. There's the top, double top. Why not? Okay. Anybody have any questions? We went over gold. We went over GJs. Any other pairs in the chats? Anything else about why I drew a fib at a certain area, this or that? Look at it. It's going. But look what it's also doing. Okay. Look what it's also doing. It's setting up liquidity to get smacked later. It's setting up liquidity. So again, this is why you could have taken a little scalpy inside here, but it's, we're in risky territory. So we'll just be patient. We'll come back out to the 30-minute. Let's reset this. And that's my overall view. If this comes up to this area, it will, the trend line isn't exact science, right? Like this trend line could be technically be moved up to this wick or that wick. So once it gets up to this area, that'll be a trend line retest. It'll be a good retracement on our fib zone. It'll be taking out these wicks. I'm sure that it will be oversold by then on the RSI, maybe even divergent because we had this high. So, we're looking into the future now, but, if we can get a push that stays below and at the same time gets higher here, right? The price is getting higher as it's getting lower in the RSI, it's divergent. So NAS, yeah, basically NAS is nothing because it's in no man's land. We have zero structure to the left. It's all-time high. So when there's no structure to the left like that, the only thing you can really do is look for a buy. And the only place there is buys is down here. So perhaps, I'm not making this call yet, but what I would do in this situation is do one of these fib top to bottom. You can see that there is the order block that's right here that led to this gigantic push off. So the 78, 88, 6 zone, which is, is my buy zone, is right here. So if I was going to risk any pips, I would risk it like this. Of course, you would have to have your patience to wait for the RSI to come down to your area and all that good stuff. But that's really the only trade. Anything else besides that is purely gambling. So if you want to gamble and throw in a small percentage, by all means, go for it. But the safest trade is to wait for this to retrace. And then also, if you're waiting for a move like this, wait for a break of structure. Okay. 1, 2, 3, and wherever those line up. It doesn't have to be perfect. But what I like to do is this second leg push. Right, there's the first leg down, second leg, third leg down. You measure the third leg, or excuse me, the second leg like this. Okay, and if the TP for that second leg lines up with your buy zone on your fib, that's 2 then confirmations you have. Then you throw in the RSI on top of that. Now you got 3. Perhaps there's a trend line somewhere. Now you got 4. You start stacking your confirmations up for buys. So again, this is just a purely made up, but the thinking is that wait for the Elliott wave to complete, 3-leg push, wait for it to get in your buy zone. Then you start stacking confirmations, mainly the RSI. I know that a lot of you guys trade on the 30-minute 30-minute trend line. Okay, so there to there. Okay, it will have broken the trend line by the time it gets down here. So maybe you look for a scalp sell. Okay, so let's play that scenario. If this sells off and breaks these lows, which it looks like it's doing as we speak, you would then measure that fib wherever this ends up. Okay, measure that fib. We'll just use this dot right here, and then enter on the retracement. So you would be entering up here somewhere, wherever you feel comfortable, wherever the RSI or whatever does. And you have a super small stop loss because we're only using 10% of the overall fib. Let's come down a little bit smaller time frame and make this a little bigger. So now this is obviously going against a very strong market and it's all-time highs. There's a million reasons not to take this trade. But if you wanted to scalp and you wanted to risk it, that would be the trade right there to take this morning. And the same probably applies to US 30, which I'm already in a trade for US 30. So wait for it to break. Wherever it finds a bottom and it retraces, fib that move, enter up here at the 78, 88.6 area, and then see if you can catch a Hail Mary. You're not risking a whole lot. Maybe enter a half position, just so you could be in there and you could test the market and test your strategy and test your emotions and whatnot. But that's about it. Wait for bait, play the pullback. Dirty 30, looks like I'm in a little bit of profit. All right, I took that off that wick this morning, so I'm in a few pips, not much. And then Goldie, like I said, we're sitting on our hands. We'll double check GJ one more time before we leave. So you guys, this is your opportunity. We've got a few more minutes left here. If you have any pairs you want to go over real quick, I don't mind. This also helps my YouTube because I'm recording this. We're gonna put this up on YouTube. You guys can go back and watch it later. But look, so I said earlier at the beginning of this call, we want this to take out this liquidity, and that's what it's doing. So we knew that it was going to liquidity hunt something first, right? So before, I've said this before, that's everything I trade. Thanks. Okay, thanks, Tristan. Thanks for watching. Thanks for coming by. We know that's going to hunt liquidity. We just don't know what side it's going to hunt first. So right now, it looks like to me it's going to hunt this liquidity, which is cool. I don't mind. Maybe even hunt this liquidity. I'm already in a trade. If it does that, I'm good. If it pulls back up to here, I'm cool because I'll just take another shot, take another short. So there it is. That's why we did those trades. I'm going to wrap this up because I see no other pairs in the chat. Please like the video, subscribe to the video. This is just for training only. This is not financial advice, all that good stuff. But I appreciate it. Appreciate the love. Appreciate the family. So, all right, you guys have a good day. Out.